Good morning, everyone. This is Teddy Kekstadt from Forex Trading Unlocked, and we're here with a Forex market breakdown for you today on September the 18th, 2019. And we just want to pop up our disclaimers real quick from us in the Nadex, just to remind you that this webinar is for illustrative purposes only. With that, let's now jump on to our economic calendar. So we have a lot of things going on with the central bank sector, as well as a lot of major economic numbers that are coming out for some of your major currencies around the globe, US dollar being number one, but then also we have the pound, the euro, the Canada, and the Aussie also. So right now, what's going on with these major crosses? We have the pound that's kind of under siege. The euro, is it a sinking ship or not? We don't know. We have to figure that one out. We'll look at the charts. The Canada, they're waiting for calmer waters, I think, actually. The Australian dollar has been kind of a bear. Let's see if there's still a reason to stay one. And then we also have the US dollar, which is kind of just in a blender. So let's see. Today we have, for the British pound, we have retail price index, PPI, and CPI. That's a big basket of technical numbers coming out for the economy. For the euro, we have the EU CPI, and we have the ECB with a speech with one of their members talking today as well. Now for Canada, we have the Bank of Canada CPI number coming out, as well as in the US dollar, we have the FOMC meeting that comes to a close this afternoon. Now we know that central bank time, Fed time, typically means that the markets either dry up or we get very skittish volatility. So please be careful and be very mindful of your trading today and over the next couple of days with that. Tomorrow we have, for the Australian dollar, we have the unemployment number. For the Japanese yen, we have their central bank, the Bank of Japan, interest rate decision. There's also a press conference afterwards, and they have their CPI number that comes out. My guess is that you're not going to see very much come out of the Bank of Japan tomorrow. If they were to cut, let alone raise rates or do anything, it would be a shock to me and probably a shock to the market. So be aware of that anything that they do something could, at least in the Japanese yen, US dollar, and crosses that are impacted by the yen, they could see some volatility if they do something. If they don't, it's more of the same. That's probably what's factored in. Then we have also in Europe, we have the Swiss. For the Swiss franc, we have the Swiss National Bank interest rate decision. There's another one that's probably going to be on hold. I'm sure they're going to watch to see what the ECB does more than anything until there's really a reason for them to pull the trigger. Then we have, for the pound tomorrow, we have retail sales and the Bank of England interest rate decision. With everything that's going on in the UK, if the Bank of England makes a rate cut, which I don't really think them doing, there is a little bit of a consensus that they will do some kind of easing. But I really think that with everything that's going on with the pound right now, and especially since there's been a show of strength versus many currency crosses, the odds are that the Bank of England is probably going to sit back and see what happens for another month and just have some verbiage on what's going on. Then tomorrow we have the US dollar, Philly Fed manufacturing survey, and existing home sales, two big economic numbers. Obviously the manufacturing sector, that's one to watch and see how that is, if there's any type of slowdown or acceleration. And then we have existing home sales. That is definitely always a big number. It's an interest rate number, as well as an economic number that can have an impact on the currencies as well, especially because we'll be in the wake of an FOMC meeting. So, and then on Friday, we still have a couple numbers that affect the euro. We have the German PPI, and then we have, for Canada, retail sales. So the Canadian market, actually, we have a bunch of stuff going on, and that's pretty interesting because usually there's not that much that we really have to, or not that the numbers don't matter, but they're typically just not as impactful, if you will. So let's look at our first chart and see what's going on. So we have the euro US dollar here. Now the market's been in a bearish trend, obviously, for the whole summer, going into the last month of the third quarter in September. But we've had kind of a balancing going on. And if you look, you can see that we have these three pivots here, and this lower one here at 109.28 is just off of this little bit of a higher move low here. So now, as far as direction, we had, obviously, everyone's aware of the fact that there was a bombing in Saudi Arabia that affected the refinery that caused a surge in the oil markets. At the same time, it caused a flight to quality rally in the currency markets. And you can see that this chart was from today. Today's market is slightly lower. Yesterday had a rebound, but Monday, you can see this big red bar, just 3 bars in here. This was the sell-off on Monday, and it looked like all of a sudden the bearish trend was going to really be impacted by the attack that had happened. Now, it's kind of funny because you know, nothing except there was an attack for sure, but we hadn't even had complete transparency on what was going on. So there's a tendency for markets to overreact, and you can see that yesterday the market came all the way back. It made a little bit lower of a low than it did Monday, and then came back to settle above where it opened up yesterday, or the prior day. So now today we have it going nowhere. So what does this mean? We have this little circle here, a digestive range. Now we have a downward sloping channel line here for the bearish trend that's been in place for the past few months. By attrition, we could just go through this and start to go sideways. Right now, we do have this bottoming situation that has occurred already because we had made a higher move low, and we had also made a higher move high. So key off these 2 pivots here, I believe, for direction. Any failure of 109.28 will most likely mean that the bears are back in full force, and also the euro is going to be under pressure for whatever reasons start to spark that move. Then above 111.06, we kind of get back into a neutral trade, back up towards targeting this 112.15 pivot. Now, right now, because we have all these numbers and central bank decisions, I would be very leery of any type of moves that occur today, because you're most likely going to see some reactions to if the FOMC meeting in the US especially does end up with a rate cut. Remember that 2 cuts were factored in before the end of the year at the beginning of the summer. We've had 1 rate cut. Is the other one coming? The pressures are there for the Fed to do it, but the Fed doesn't need to do something because the rest of the world wants them to do. They should be doing what they believe is right for the Fed and the U.S. economy. So I think that still the odds of it happening are still a little bit slimmer than likely that they will. That being said, I think it's factored in already to the markets, and there's no reason to expect, should they not do anything, that we're going to have a big reaction. Now, should they cut, that's where we may have a big knee-jerk reaction. So I'd be very careful whether you're on the long or short side, because we could have, that's why I have this digestive trade here. As we go sideways by attrition, we will take out the downward sloping channel of the trend for one over the next couple of sessions as we head into the end of the month and the beginning of October. So just a sideways trade, which the euro has been basically doing for the whole year, just now it's finding its, you know, tightening its range to the lower part of this 112.5 down to 109 area. So I think we're going to have this coming out of this. We're going to have we're coming to that line in the sand, if you will. If the Fed does cut rates, then that means that the dollar perception of interest rate cuts will be over. Then at that point, it will be a rebalancing. So everyone that had been riding that wave, you may see a profit-taking wave that occurs if the Fed was to cut rates today. So all in all, if you are not in the market, I always tell people, if you're not in the market going into a central bank meeting, wait until it's over to go up, fight, play golf, watch a movie, do whatever you got to do, go out to lunch, and then come back on Thursday morning. So, but if you are in the market right now, or you're looking for a play, I would look for a volatility play, and definitely use these keys. If you're already short, then obviously this 111.06 is an area to be careful of. Any rally above that would mean higher move highs and short-term bullish strength in the market, and definitely targeting that 112.15 pivot. Below the 111.06, I'm not necessarily bearish, because you got to take out that 109.28 to really set off the bears again. Above that 109.28, you're looking at basically a sideways range trade. So what kind of trades do you have? Well, if you're short, I would say keep your risk, especially with the all these Fed central bank meetings. Keep it tight. Be very leery of trying to hang on to shorts above 111.06. If you're an options trader, I would say that there's key strikes around 111 even, And then 109, those are the ones to trade off of and look. Anything in between there, you're probably looking for the market to chop around. That's why we have the digestive range. So now we have figured out that so far we have pretty much euro weakness, US dollar in flux. Now for the pound, we have the pound US dollar, and we have this digestive range as well. Now they had an explosive move on Friday that capped up, which made these newer move highs. Then Monday it fell off, and then yesterday we had the reversal and made a higher move high. So unlike the euro that just did kind of a knee-jerk reaction sideways, the pound pressed higher move highs yesterday, and then now it's going lower, which is pretty much to be expected in the as we are in front of the FOMC meeting and the other central bank meetings that we were talking about. So right now, this market is a short-term bull, meaning dollar weakness and pound strength, which means a lot. So for instance, after this FOMC meeting, if they do cut the rates, then that would mean that, like I said in the last slide, that the expectations of another rate cut are off the table. You may start to see some profit-taking moves, which would then probably be negative for the dollar traders, meaning that other currency crosses, especially if they're bulls, will probably run, as well as you might be seeing some turns in some other currency crosses. So we have to wait for the decisions before we can react and figure out what's going on. But let's look at these pivots that we have here. We have this 125.06, which is just off the high from Friday. And this is where I have your upside arrow. And then we have this purple pivot here at $122.85. So this is the last higher move low. So should we see a break below this digestive range and take out this low here? Is it bearish to pound? Not necessarily, but it probably means that this range that we've begun to set off of this low that we made at the beginning of September could become the area that we're going to start to see this snake around in as we head into Brexit. So if you look at the end of this digestive range thing here, of these ellipse here, this is right before we come into the Brexit deadline, which that would probably be where that last week or so would be where we start to see a pressing of the resistance or support. In lieu of that, I think that over the next couple of weeks, it's more likely that we're going to start to see sideways action develop and kind of a little swing trading situation. So right now, I would say that if you are an aggressive short, obviously the high from yesterday would be where you don't want to be long above, because this is definitely in a short-term bull market. And the one thing about the pound, as you see, like last Friday, we had this explosive move and made new highs. The same thing happened when it came off of this low here. The British pound, like all currencies, when they trend really well. Oops, sorry about that. And the pound especially has explosive moves. For it to have, if you look at the distance of the range that was on Friday, you have it down here just above 123 even, and it goes all the way up to 125. A $2 move in the currencies, not that it can't happen or is unlikely, but it's more likely to happen in a currency market like the pound. When the pound starts to move either up or down, it's a freight train. I don't even know if Superman would have a good, easy time stopping it. So just to pay attention to those potential situations. So if we make a run for new highs after these economic numbers, and especially the FOMC meeting, any rally above $1.2506 would be something I would say, if you're on the long side, ride it, and if you're on the short side, you should probably be if you're not out, you should be getting out. So there's a key pivot there at 125.06, and then below that, definitely it's only below $122.85 that the bears start to become an issue, and then we're probably going to target this 121.54 area. And this would be where I think you're probably going to see the bottom end of a slide, because right now we set the low in the beginning of September. We've made higher move highs going all the way down into mid-September. So for us to have a corrective break that would come down towards this purple pivot here, which you can see is near a previous high, that's typically a normal market situation and is not unlikely to occur over the next few sessions to another week or so. But I do believe that as far as directional wise, to key off of that pink pivot there at about 22.85, and then the upper green pivot line at about 25.06. In between there, then that's for your range traders and options traders to exploit those strikes near those levels, and then obviously to exploit any type of rally above or below those pivots as well. Now let's look at the Australian dollar, US dollar. Now this market, it's kind of ironic that we talked about the surge in oil and what's going on with that. So what does that mean when that happens? Well, typically it means flight to quality for the dollar. So that means that, let's say, for instance, this market here, Australian dollar has been rallying just like the pound has. It made a higher move high last week, and it still had positive sessions in the wake of this turmoil in the Middle East. However, it does mean typically dollar strength, dollar weakness, or other currency weakness in this situation, especially a country like Australia that has to deal with China and what have you. In China, we know the oil supply is definitely reliant on Saudi Arabia. That's one of their major suppliers, which impacts obviously their trade and their economy as well. So in the short run, that's probably the situation until it's resolved, or at least is quelled, if you will. You're probably going to see a little bit of pressure on the Australian dollar, US dollar trade. So I have these two, we got this major pink pivot here at 69.09, and then we have 68.97. So this little resistance band right here. So below it, the previous high from a week ago, I think the market is definitely set for a bearish correction. You can see that it's been riding this 68.31 lower green pivot here, and this I think is your line in your sand. We bounced off it yesterday and settled positive, and then we turned around, and now today we're pressing this level again that we had taken out yesterday's low. This is a negative indication that most likely we're going to see a correction, probably still kind of touch down to 68, maybe down to 67.5 area over the next week or so. And right now, because of central bank action, I think that the market's kind of skittish and sideways. But once we get through today, especially with the FOMC in the US, and then tomorrow with the other central banks, I believe that you're going to see some free-flowing swing trading where the bears are going to probably start to pressure this market. Another thing you can use as a gauge to for this is to watch the dollar index. The dollar index looks kind of like it's ready to start turning back on a bearish direction for a little bit. So if that does happen, then that would change this outlook for here. But if the US dollar index does start to become a bull, especially after the FOMC meeting today, then I would say that the bears have a good chance in one of these currency crosses to take advantage of a slide, meaning a bearish move for the Australian dollar, bullish the dollar, and then we could probably see a break below the 68.31 pivot, which we are just treading above right now, and then come back towards the 68, even the 67.5 area. Remember that the Royal Bank of Australia has not cut rates yet, and they have been expected to do so for the past couple months, and they have not yet acted. So that's another thing that's also factored into the trade for this currency cross. So right now, let's look at these pivots one last time. So if you're directional right now, I would say that being on the short side is we're in a corrective mode. Overall, we have obviously had a nice bullish turn over the month of September. Right now, we have every reason to believe that we're going to be testing support more than resistance. But if you're not directional and you think we're going to hold this range and have a lot of indecision, then the 68.97 down to 68.31, that's your key pivots for a range to trade off of for strike prices, and definitely for breakouts. Anything above 68.97 means that we will be making higher move highs after a higher move low, which would indicate strength in this market. So definitely, if you're bearish, keep that in mind. If we take out that high, that's a very big reversal. So keep your I think that if you're bearish, make sure you're really, really tight with your risk. And then if you're bullish, well, you know where to look out for a breakout. All right, so now that we've covered those currencies so far, let's look at the US dollar Swiss. So right now we've been talking about some major currencies, and the US dollar Swiss is one that even though we mentioned that their central bank is going to meet, odds are is that they're probably going to do nothing. It's going to be more just a exercise in verbiage. Obviously, the trend for the US dollar Swiss has been positive. I think that's more of a relationship because of the strength in the dollar index. If you see, this has been a very big swing trade as it's been going up. The market grinds higher and then sells off extremely within the 1 to 2 day period, and then grinds higher and then sells off again. Right now, we're running just below parity. That's that magic word that we hear all the time. And when you hear parity, typically it means US dollar Swiss. So is the dollar strong enough to overcome resistance and make a run for parity again? Well, anything can happen. The trend is your friend, and that's where it's looking. But I think what you're going to most likely do is have a trade like what's been going on over the past month and a half. It's more of the swing trade action. The one thing you have to key off of, though, is this 98.57 level. So right now we're trading a dollar above that. If the market obviously continues higher and takes out the highs, we have higher move highs, very bullish. But you can see that this has been channeling pretty evenly for the past month and a half. So if history repeats itself, then as we get through the central bank action, we may spike high, and then we're probably going to start to, by attrition, go sideways to lower to come down towards this upward sloping blue line. Now the key is maintaining these higher move lows. This critical one here at 98.57, obviously it comes in at the upward sloping support here, but before that, if it comes down, it's definitely would indicate a negative short-term signal because we would have a lower move low. Now, the first time you poke a lower move low, does that mean the market's going to tank and we have an epic bearish move that's going to unfold? Not necessarily. We still have this upward sloping support line. So right now we're kind of ripe for a little bit of a sell-off and a test of the 68.57 level. And whether we bounce here or not, what I think is going to be what's going to decide the fate of the US dollar Swiss as we move into the end of the third quarter and into the fourth. Remember, Brexit is coming as well. So as far as dollar strength, we're going to really need something to drive the US dollar higher to, I think, maintain this bullish move that's going on right now in this currency cross. So as far as bulls, I think right now, if the trend is your friend, key off this 98.57 level. Anything below there, I think that you're either looking for a digestive phase where the market's going sideways, or a potential correction back to the low downside. And remember that even though it's in a short-term uptrend, it's actually in a longer-term downtrend. So this right now could be the end of a corrective move. And if you check the dollar index, this is another one where you might want to be, if you're trading the Swiss, US dollar Swiss currency cross, make sure you're eyeballing the dollar index. Any harsh turn in the dollar index most likely is going to end up resulting in one of these violent sell-off days, like, or 2-day periods. Now, is it going to reverse the trend? I don't know. I don't have a crystal ball. Nobody does. The short-term trend and momentum is definitely to the upside. The longer term is bearish. So there's reasons for us, especially after this extended uptrend for the past month and a half, to see a slide. Now, a failure from 98.57 definitely will have us, I think, taking a test of this upward sloping blue line. But this level is the one you really got to watch out for. This is the 98.03 to 98 even support band here. We have a major pivot that comes across. That's the green line, and then the purple line is off of these prior higher move lows. Should we come down and test this level and fail here, that would be a very negative indication that, for one, we have dollar weakness and a lot of Swiss franc strength. But a lot of Swiss franc strength would have to come from some issues that are going on in the EU, like a lot of positive things in the economy and a lot of positive tones towards Brexit and a balancing in the whole Eurozone. What are the odds of that happening right now? If you watched what's going on with Bojo, Boris Johnson, and Parliament and every other aspect of the UK and their government, yeah, I don't think that's going to happen. So I think the dollar weakness would be the dog that wags the tail to make something like that occur. So that's why, once again, watch the dollar index, and if dollar weakness does come into play, well, then this level here does come into jeopardy. And remember that if we were to turn back down here, that's a rejection of a run towards parity again, which we have been doing. And it's something that right now I think that we're starting to see, is that even if there's dollar strength, currencies, just as the dollar is a flight to quality currency that we could see as it happened over the weekend with the spike in oil on Monday, that so is the Swiss franc. See, unlike the other currency crosses we talked about, the Swiss is also a flight to quality currency. That being said, that even though the dollar is strong, the Swiss could be stronger. So we'll see what happens with that over the next couple of days. Right now, just like all the other currencies, we got the central banks going on, and until the FOMC meeting is done at 1:15, I don't think you're going to see really much action until then. Let's see what the releases are. But as far as for traders here, if you're a bull, keep your stops tight. I think you're already obviously on the right side, but be ready for some aggressive sell-offs. So I would say be ready to just take some profits. And if you're a bear, I'd be very careful until you have a signal, which would be one taking out one of these prior higher move lows. So there's not much really for you there. Now, if you're a range trader, this is the one nice thing, is if you look at the bulk of trading over the past, any of these little grouping periods over the summer, we're swing trading. So once you establish a higher move high, like we just did again, even if we maintain the bullish trend, we're looking for a higher move low. So we're looking for a containment range. So if you're an aggressive options trader and you're not necessarily a bear, you can look to trade the strikes right above the 99 half area and around 90 parity down to 99 even area. And then also down to here, we have 99 even down to 98 half. Anywhere in those areas, those are strikes that I would say that you can work with, and try and trade the digestion, if you will. And then obviously we showed you the failure points. Now let's look at the US dollar Canada, because we mentioned Canada, but are they waiting for calmer waters? Is that's what's going on? Because we know that, look at this, the US dollar is a blender. The Canadian dollar had this is overall in a nice uptrend, but look at this, after making this higher move high just above our pivot here at $133.79, we've had this big sell-off through another major pivot. So what does that mean? Well, the intermediate trend is obviously a bull, short term is mixed, and now we had this higher move low here, and now the question is, are we making a lower move high? Are we going to fail, or are we going to drive this market all the way up towards the challenge of this $133.79 and keep this US dollar bull going? That's a real iffy one. I think that you're more likely going to see a lot of range trading, and even if the momentum stays bullish, I think you're going to have a big spiky trade. Like if you see how this has been trading for the most part since August, except for a couple trend days, it's been a very choppy market where you have good ranges, but it extends all the way to the downside and ends up settling all the way up towards the top, or vice versa. It's a blender trade. I mean, you look at what happened here with Friday, you had a big move to the upside that was kind of reminiscent of what was going on with the pound. But this was a dollar move, and then you have obviously the spiking here with these other days here. So this is about dollar strength coming off of, I think, the oil. But this is also, you gotta remember, unlike other countries like, for instance, the EU or JPY or even Australian dollar, Canada has oil. So what does this situation mean? It means that there's flight to quality in the US dollar because of turmoil in the Middle East and a spike in oil because of the threat to oil supply. Well, that means oil prices are strong, which is good for who? Oil producing countries. So Canada, it's a mixed bag of goods. So while the other currencies may start to swing trade off of any Middle Eastern news, I would say that the US dollar Canada, it's not going to be able to ride that because it's going to cancel out any dollar strength. It may be outweighed by Canadian benefits from the prior price of oil. So for that, I think you're going to have a really good opportunity now for your options traders versus directional traders. Directionally, I think if we have a failure here of about 32.36, and we have a lower move high that has been established, and then we will be looking for a test of support down here at 130, 134, looking for newer move lows, and then we would have a bearish trend. Now that would mean that we have a lot of dollar weakness and Canadian strength. I don't think we would have to have, besides an oil rally, a lot of things for the Canadian dollar to have a big show of strength. I don't know what would do it, because there's central bank action and even the price of oil is going to be outweighed by so many other things that are in the news right now. So for range traders, I think you have a really good opportunity to capitalize on a daily basis. And then even as a swing trader, we're looking to, I think, have a lot of this going on, which is here, like set a range. So I think that you can key off this higher move low, which is on the intermediate term, a higher move low. But then on the short run, if this is a high, this is your lower move low, this is your lower move high, then we're looking for a lower move low. So that would be definitely this pivot right here at 130, 134 over the next week and a half to 2 weeks heading into October. Any failure here obviously confirms a bearish trend for the US dollar Canada. Only a breach of this upper 133.79 would mean really dollar strength, looking for a challenge of these multi-month highs that would bring us back to where we were before the summer started. Is that going to occur? Who knows? Like I said, with all the other news that's in the going on globally, I think you're going to see much more of a neutral trade in this US dollar Canada market, which is good for options trader. And directionally, I think you have to be very careful and just probably stick to intraday trading unless you are capitalizing off of one of these major swing points. So the last market we want to look at is the US dollar Japanese yen. Obviously, oil is something that impacts them. You can see that we have been railing. It's been a bull here of the US dollar JPY, but remember, the overall trend in this market is a bear. So right now this is an upside correction and still remains one unless we take out this upper pivot here, and you can see I have an up and down arrow at the 109.347 pivot price. So anything below there, we're looking to run out of gas and then come back for a test of this 106.75 area, which is the upper part of this range. And we could see support here. It's not necessarily bearish if the US dollar would fall, yen would fall back down on this level. Remember, the overall long-term and medium-term trend here is a bear. So this is an extended short-term bullish move, and we have just made a higher move high here, and then we made a higher move low with a higher move high yesterday. So right now it looks like we're basing. We may not necessarily be topping, but we may be setting up for a range trade. So key off the oil trade and also a dollar index for direction here. I think that the only way you're going to really see a big directional move long term would be a breach of this upper green pivot here at 109.347. And definitely only a failure here at 106.756 would be something that says, hey, US dollar or JPY, it doesn't matter how the dollar is trading against other currency crosses, it's getting weak against the yen, which could occur. It's been happening. It's been going on for a while now. The Bank of Japan is going to meet this week, and we'll see what kind of decision they make. My bet, at least my expectations, is that they're going to do nothing. Remember, folks, 25 years ago, they started the negative interest rate trend. They had their stock market collapse. Right now, the markets are strong. If the Japanese are going to do any cutting or easing or whatever, they're going to wait a while because they've been dealing with this for quite some time. And I think if anything, they're just watching the rest of the world being like, I guess you don't remember history very well. So that being said, with this market, key off those major pivots. We don't really have much more to talk about on that currency. Definitely watch out for the statements that are coming out. And remember, besides the central bank meetings that are happening and whether or not they do or do not cut rates, we have a lot of economic numbers that are coming out this week. So it's a mixed basket of goods. I would watch that dollar index to help give you a gauge for these other major currency crosses. So with that, just want to wrap things up. Remember to do your homework, look at the markets, weigh the potential trades, have a plan, always have a plan, and stay the course with it. I'm Teddy Kekstadt for Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com. And you can also find me on Twitch TV for Forex Trading Unlocked and StockTwits and LinkedIn. Please like, follow, and share. And if you catch up with us whenever you want to see what's going on in the FX world. And if you want to read a little book that I wrote, it's called High Probable Japanese Candlestick Patterns. It's available on Amazon.com, on paperback and Kindle. You can also read it if you're a Kindle Unlimited member as well. And the book has all kinds of money management and trading inputs for you to incorporate with your methodologies, and also can show you how to utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, good luck, and be wary of what's going on with the central banks. Be careful with your trading today. Thank you very much. You have a great day.